everybody.
Sean and Kelly here, Price and Price Group of Samson Properties. And what are we doing today?
Today we're going to talk about the 3 top questions we got asked just this week.
Yeah, they're good ones.
I'm going to start.
Okay, go for it.
The first one has been, I hear it's a seller's market.
Yes.
So why is it a good time for me to buy a house right now?
So I've got an opinion on this. I want to hear yours first, though.
My opinion is because it's only going to get worse, especially in our local area. I mean, the house prices keep going up and up and up. Interest rates really are not going to come down significantly, right?
Mm-hmm. And what happens if they do?
And well, you can refinance because you do what? You date the rate.
That's right.
You marry the price and date the rate.
That's right. No, you marry the property, date the rate.
You also marry the price.
Yeah, you marry the price. You're right. Yeah. Yeah, and
I married the price.
Ooh, nice. That was the best day of my life. And then the other thing is that when the prices go down, or when the interest rates, if they do go down, prices are going to skyrocket even more.
That's right.
Because
and
more
you're
buyers
going to have more competition.
Yep.
So appreciation and the fact that you want to not have all that competition.
That's
you
right.
already have competition, but.
That's right.
Yeah.
And my opinion on it is the saying that we always say.
It's
that
the saying
when was the best time to buy a house?
Yesterday.
Yesterday. Or 10 years ago.
Oh,
or
yeah.
30 years ago. Or whatever it was. What's the next best time to buy a house?
Today, right now.
That's right. That's right. Historically, real estate prices have always gone up. And we've seen that even with this bubble that's happened. And we did a video last week that
bubble?
This expansion, this blowing up.
You say bubble and people are going to be like, when's the bubble going to burst?
You're right. You're right. This strong appreciation.
Yeah.
And I'm glad you said that because we did a video last week where we dove into historically, like what happens when prices do come down, and is based on history, is it smart to wait for a crash?
Yeah.
And my opinion is no.
No.
That's right.
There's no indicator that it's actually going to happen.
That's right.
Soon anyway.
And we've had buyers sitting on the market since 2020 waiting for the crash because it's getting too high. And now they are 30%, 40% behind on prices, and they've lost out on hundreds of thousands of dollars.
Yes, they're very, very sad. But we're there for them, and we're gonna come into the rescue, and
That's
we're
right.
Stop that sadness.
That's right. That's right. All right. Question number 2 that we have received is, baby, what are we going to do when we no longer earn any money working with buyers?
We are hearing that a lot.
Yes,
and
we're hearing.
Like, what are you talking about? So we heard realtors are they're quitting and leaving the market. Well, I know
we've had specific questions saying that you guys aren't going to get paid a commission anymore. So that's.
What are we going to do? I don't know about you. I'm set up like really well.
I'm going to fast a lot.
My brother, think about it.
Okay.
My brother's a genius.
Yeah.
My sister's son is a rocket scientist.
Yeah.
Our own son
is a rocket scientist.
Is like, I mean, he's not like a practicing physicist, but physics and mechanical engineering major. Another of our sons is like this coding genius going to TJ.
Our daughter's in movies.
Movies. And she's been like writing essays and these beautiful things since she was in kindergarten, right?
That's
and
right.
She learned how to write. Our other one is sparkly and gorgeous. So you can think about your own thing, whatever it is. I'm probably going to be like really gorgeous from Lorelai.
That's right.
And like she'll fix my hair and everything. Yeah. And then Rowan will like totally write movies and scripts about all of the genius I go and spread in the world in all the different ways. So, I mean, the sky's the limit for me.
Okay. So my mom lives in a beach, so we're going to go live in a beach town and do all that stuff.
Okay, but instead, I think
we should keep on making money.
We're just going to keep being real estate agents.
So the truth is that yes, the structure is changing, and yes, the industry is changing, but the compensation is going to stay and remain the same in all reality, because it just needs to be negotiated differently. Yeah. And it's going to be more like working with a seller. When you go in and you sit down with a seller, you present to them and you negotiate your commission and so on and so forth. It's the same thing with the buyers.
Right.
And you would negotiate that buyer's commission in the seller contract. So,
and really in our state, not much is changing here in Virginia. I mean, we've always negotiated both, and it's always been negotiable, right?
That's right.
Case in point, a contract we just got under, it's like the seller wasn't offering as much compensation as our buyer and we agreed to. So our buyer's
covering the difference.
I mean, this is just kind of a matter of course. Nothing has changed except the media telling you guys, the sky is falling and all that.
And there are a lot of realtors leaving the industry. But they're part-time realtors. They're the ones that have full-time jobs and they just kind of bank on selling a house or two a year. And it being easy. They're not used to being into the negotiations and doing the uncomfortable
If you're working with a full-time real estate agent, they're not going anywhere. This is the job. This is how it is.
That's right.
So
okay, so that's question number 2.
I don't get to show off my genius out in the world beyond.
You can still be pretty though.
Lorelai, get that cosmetology license.
That's right. All right, and question number 3, what happens if a buyer gets cold feet and they want to back out of a contract? We had a seller that was concerned about this. So first thing is, once that contract is ratified, it is a legally binding agreement. There are no free, oops, I got cold feet and I'm out. Now, that's the real answer. There are a couple scenarios where a buyer could get out of a contract. Number 1 would be a condo doc and HOA review. Yeah,
they have depending on the state, like in Virginia, you have a 3-day review period, and then you can pull out of the contract for anything that you find in there that isn't going to work for you and your family situation. An example of that would be, let's say there's only street parking in this HOA and they don't allow any kind of commercial vehicles, and you run a business and you have your contractor truck, which has your sign on it and everything, and they wouldn't allow that. That would be a really great reason. It's like, oh my gosh,
that's
this
a great
isn't gonna
example, because we had a buyer that purchased a condo, and he has a company vehicle. It has a small logo on the vehicle that did not fit in into the condo association rules. Luckily, they had a garage, so the only thing is he has to stay in the garage.
And
but
it would fit in the garage.
Yeah, and it fit.
And if it hadn't fit in the garage, then that would be a real reason to pull out.
Or let's say they have pets, and the seller's agent wasn't aware that there was a pet restriction, and then when they read through the condo docs, realized they couldn't bring their family pet. They may void on that.
Right.
So there's a 3-day.
And you don't have to say why you're voiding.
Right. Just based on condo docs.
Right. True.
So that's issue number 1. So the way that a seller mitigates that risk is, as soon as you sign your listing agreement, this is what we do. As soon as that listing agreement signed, you order those documents.
We order them.
Yeah, we order them. It can take about 2 weeks, 2 to 3 weeks sometimes to get them. So you want to have them in hand so that the date that contract ratifies, you can deliver them. So that 3 days is at the beginning of the contract versus being, 3 weeks into the contract.
That's true.
Okay.
Not everybody does that. And
that's right. The other option that gives kind of a freedom for a buyer to back out would be an inspection contingency. And that's why it's so hard for a buyer to get an inspection contingency in this market. As a seller, there's a couple ways you can mitigate this. Number 1, if you're willing to give that inspection contingency, give it to them as a pre-offer inspection. Let them go and do the pre-offer inspection. This is what we have our buyers do, and it works for...
or a walk and talk, right? There are different ways to get around. Like we would never advise anyone to make an offer on a property without any kind of home inspection, right? It's not great. It's not a great
Especially
idea.
in Virginia, buyer beware state.
Yeah.
But sometimes you have to, because sometimes the seller doesn't allow it.
Right.
And then the other option is, if there is an inspection contingency, again, shorten that as much as possible. Give them a 3-day, a 5-day. Technically, their buyer is not supposed to void for anything that's not significant on that inspection. But sometimes buyers get cold feet and they'll say voiding based on inspection contingency, and they just send the report over and they can void the contract.
And that is a big risk for sellers. We've had buyers ask, well, why, if they believe in their house and they're not selling me a bag of, what is it?
A bag of
tricks?
Bag of tricks. I like bag of tricks.
Yeah.
That's what we're going with.
Then why wouldn't they want me to get a home inspection? And it's because it can be abused. And also some home inspectors feel like they have to earn their money by putting red flags on so many things, instead of just like, hey, yeah, sure, this outlet doesn't work, but let's, it's not a big deal. You could change it for this or do that. They're like, whoa,
you don't know what the electrical system's going to do in this house with this outlet not working. So those are the main ways. And then the last really contingency would be a finance contingency, but the buyer doesn't have control over that. They actually have to get a denial letter from their lender, and the lender has to be a legit denial.
That's like pulling teeth.
Yes.
Even when the loan officer says, "Oh, I'm sorry, underwriting says we can't fund this loan," it's like, "Give me the letter.
Yeah.
Give me the letter. Give me the letter." And they're still,
because they have to go through a process, because it has to be a legit denial. It can't be just, the buyer decided to back out.
Yeah.
So really, the inspection contingency and the condo or HOA docs is the only time a buyer can kind of back out with cold feet. So you want to do
without losing your deposit.
Without losing deposit.
I mean, you can back out all day long and lose your deposit.
Yep, lose your deposit or be sued for damages. Yeah, the seller has options on that. So, and so our job as the buyer's agent is to make sure that the buyer is protected, make sure they really want the property, write as strong of an offer as possible while protecting their earnest money deposit. Our job working for the seller is to make sure we're mitigating those risks where the buyer could back out and shortening that timeline as much as possible, so you're not sitting off the market and missing the market activity.
That's one thing I do want to kind of hit on is there are so many little nuances that change in the contract, both in listing agreements, buyer's agreements, offers, which turns into your contract, and in different states, that if you have someone who works, we only work with sellers, oftentimes they're not really real clued in to the new tactics and strategery that buyers agents are being able to use for back doors. You don't want to work with someone who's only working with buyers because they're not familiar with the seller side of that. So I mean, really, you want to have someone who knows and navigates and negotiates on both sides of that.
And that's a really good point. And it's not just contractually; it's also behavior-wise. Like if I'm walking through houses with buyers and I'm hearing, "Oh, I really don't like this green carpet," or I'm hearing, the fears that they have, or whatever details and mindsets that the current buyers have, and we're working with sellers and we're hearing their take on the world. We can take those together and advise our buyers, like, this is what the sellers are thinking. Let's write it this way. Sellers, same thing with buyers. Hey, let's counter it this way. So there's ways that you can do this.
And sometimes the big teams too, right? Yeah. It's like you'll be sold, right? I mean, we're selling you on a listing agreement, and then it's someone else that you're working with the whole time, not someone who, I mean, Sean will intentionally sit in open houses so that he is the ears hearing what the buyers are saying with this price point in this area, with this price point in this area. And this is all a way that you hone your craft as far as knowing who's saying what out there. So you definitely want to have someone who's out there in the know, the current trends and all of it, right?
That's
Which is basically us.
Yeah,
so
that's
I'm just kind of telling you, like
this is that brilliance she was talking about that she's going to spread. All right, so those are our top 3 questions for this week. If you guys have any questions, go ahead and put it in the comments on whatever platform you're seeing this, and we'd be happy to answer them. Yeah. And do you have anything else?
No, but I think like you look really good. Like the lighting for you look so pretty today.
Well, thank you. You're very mighty pretty also. And did Lorelai work on you today?
No, she didn't.
All right. Okay, we'll see you guys next week, and let's go ahead and hop to the market report.
Bye.
Hey everybody, okay, here we are with this week's market snapshot. What's happened in the Northern Virginia real estate market in the last 7 days in under 5 minutes. Here we go, and now.
All right, everybody, as usual, the jaggedy orange line is buyer activity, and the jaggedy blue line is the new homes that were on the market. And if you'll recall, last week, Sean predicted that the activity of both were going to go down.
Because of?
Memorial Day weekend.
That's right.
And?
It did.
You were right.
All right, so Kelly is absolutely correct. The buyer activity did decrease significantly because the buyers were out of town. And like we said last week, that was the perfect time if you were staying in town to go out and buy. And we had a buyer that actually got under contract.
Confetti.
He followed the instructions and got it. And then we found out he was only competing against 2 other offers when we wrote the offer, when it went into the process of the seller reviewing. But the seller's agent emailed me later saying they got 12 offers that came in as everybody came back in town.
After, yeah.
That's right. That's right. So remember that if you're still looking next Memorial Day. And we're going to play this next year to let everybody know.
We're going to play this next year. And we're going to go for Ryan again.
That's right.
Brilliant buyer.
Brilliant buyer.
Brilliant.
Inventory also went down because the sellers were also traveling. But the gap in between the two did increase versus the last 7 days. So we increased the strength of our sellers market again. So this week, what I anticipate happening is we should see inventory spiking. Buyer activity may go up a little bit. It may remain kind of low just because there was no inventory on the market this week. So we'll see what happens with buyer activity, but I do anticipate inventory spiking again. For sellers, now is the time. We are in the summer market, so you've got to get on the market now. It is the time to get into that market.
But I'm wondering, with it being an election year, do we think that we're going to get closer to the even line of between buyers and sellers market, that it's going to get closer to even than we've been in a long time?
No, because during the fall we come down here. This is what we've done in the last couple of years. I think during election time we'll get back down here again, but there won't be much inventory during that time because nobody knows if they're moving or not. So yeah, it'll stall out a little bit, but I don't think it'll get back to the even line.
We're not going to get there.
I don't think so. Okay. All right. Okay. That's this week's 7 minutes. Wait, 7 days in under 5 minutes.
5 minutes.
That's right. All right, everybody. If you have any questions, let us know, and we will see you on next week's Snapshot. Go.
All right. Hey, everybody. It's time for our Mortgage Minute with Tatiana. How are you?
I'm good. How are you?
Doing good. Did you have a good weekend?
Yeah, I survived.
You survived the nuclear
I survived.
I was thinking about you so much. I was like, I want to go to Lake Anna.
Yeah, I did some wakeboarding. It was fun.
Yeah. Any soreness, any injuries that came up?
No.
You don't even have a sunburn. You're like perfect.
No, I tried not to be under sun too much.
Yeah.
Put a lot of sunblock.
I can't even go bowling without getting sore, and she's out there wakeboarding.
All right. Tell us about our rates this week.
Let me tell you about rates.
Okay.
And it's gonna be technical difficulties again, real fast.
Get better at that, technical difficulties.
All right.
Okay.
Like this, I don't know what you can see, but yeah, so for the past week, the week of May 24th to the 30th, interest rates remained flat. There were some comments from Freddie Mac's chief economist that actually drove the rate slightly higher. It's comments about inflation and some treasury auctions that caused the market yields to rise. So all that contributed to slightly higher rates, but very small difference, 7.29% on 30-year fixed, and FHA is at 6.82 and jumbos at 7.5. So, and I apologize if you hear noise because I'm in the office. Can you hear me? Okay, good. Yeah. So that's it's pretty flat, nothing much happening, so it's not too bad.
Okay.
Okay. All right. So it's not good news, not bad news, just is.
Yeah.
No news is good news.
That's right.
Exactly right.
That's right. And we're coming out of Memorial Day weekend, so things should start really picking up for the next few weeks. So it's going to be a fun ride.
Yes.
Yeah. Okay. Well, got a question for you. We had previously done a video on adjustable rate mortgages. You had kind of explained how those work. But let's kind of do a more broad subject. What's the difference between an adjustable rate mortgage and a fixed rate mortgage, and which one is best? How do you know which one to get?
So, and I'm gonna stop pausing because I didn't really have any slides on that. So the difference is obviously fixed mortgages rates are fixed, right? So we have 30, 25, 20, 15, and 10 is the shortest term. When rate is amortized, the mortgage is amortized over that period of time, a rate is fixed for that period of time. So let's say if you're doing 15-year fixed, it means that rate is fixed for 15 years and you will pay mortgage off in 15 years. The ARM is, it stands for adjustable rate mortgage, and that's what it is. The rates adjust, but they have a fixed period. For example, we have 5 1-arm or 7 1-arm or 10 1-arm. It means that the rate is going to be fixed for 5, 7, or 10 years. And after that, it will start adjusting. And that second portion, second half of 5-1 means that it will start adjusting one time a year.
Okay.
As of right now, this 1-arms are really not there anymore. We have 5, 6 7, 6, 10, 6 arms, it means that rate will change every 6 months.
Wow.
Is that because the
Unfortunately, not
market's so
years.
much more volatile? Is that why?
Well, yes, because, you know, instead of rate adjusting once a year, it will adjust um twice a year, basically.
Yeah.
Okay,
Is it still a 30-year mortgage?
Yes, so the
Okay.
amortization is over 30 years,
Okay.
but it would start adjusting either at 5, 7, or 10-year mark.
Got it.
But you will, it's a principal and interest, so it is amortized. You will pay it off in 30 years. Typically, this type of loans, they don't have prepayment penalty, so you still can pay extra if you like.
Okay.
So the arms, why someone would choose arm over fixed rate is if the arm rate is lower than fixed rate.
Yeah.
Right now on conventional loans, conforming loan limits in our area up to 1.149 million. The difference is really there's no difference. Actually, in some cases, arms have worse rates than fixed
oh,
rate.
wow.
You're gonna find more clients interested in arms in jumbo world, jumbo space over 1.49 million, 1.149, I apologize. So because then the rate is gonna be slightly lower. Let's say we talk about 7-year arm, and the rate is better, let's say by 0.5%.
Yeah.
So if you know that you're probably not gonna own this property for that long,
Yeah,
or you think that rates are gonna get better and I'm gonna refinance anyways, so you'll go for that shorter term rate, because even 0.5%, even if it's 0.25%, when you're talking
Yeah.
about this high loan amounts, it's a
Yeah.
big difference in the monthly payment. So you want to save some money, you get the arm. And
Right.
7, 10 arm, they're a pretty long time in historically. And you tell me if you agree that people keep houses for 7, 10 years and then they move on, right?
Yeah,
Yeah.
sometimes I think the average is 5 to 7, but we've got people selling after 2 years right now that are
Yeah.
starting to recycle through, and
I
then
was
we've got
gonna say,
people
that's
that,
kind of long. I
Yeah.
think, I love the idea of a 7, 10 arm.
yeah, it's plenty of time.
Yeah.
Yeah, that's almost like that's
Yeah.
certainly a full cycle.
Exactly.
Yeah,
Yeah.
I mean, in that amount of time, you're either ready to upsize or downsize or whatever. I mean, if you're like me, you're ready to move.
You just bored.
And it definitely doesn't work for everyone. It has to be case by case. Some people just don't like that uncertainty and they don't want to deal with that. That's perfectly fine. But those that know they're gonna move out or refinance or whatever, then this is gonna be a good option for them.
Okay,
Okay, makes
Good.
sense.
I like arms.
I like arms. I like your arms. I don't know why I would think. I was gonna say with it. It seemed appropriate. All right. Thank you for that. Anything else?
No.
Oh, goodness,
Well, and on
She
a
has
compliment.
very nice arms, I agree.
She does, doesn't she? She works there.
She works out, I can tell.
That's right. There you go. All right. Well, okay. Well, how can people get in touch with you if they have any questions?
Yeah, call me at 571-245-3000.
All right.
Thank you,
And I'll
Tatiana.
We'll see you next week.
Okay, bye.